Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So as always, we're going to start with some news out of China, the China weekly insurance numbers. And then there are some other topics I want to cover with regards to Tesla today, Tesla in the future, and what has happened back in 2023. As always, if you enjoy these type of videos, leave it a thumbs up, subscribe if not, really helps me out. Oops, hit the microphone. Really helps me out a lot. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So as always, we start with the Tesla weekly insurance number. The number came in at 13,800, so a rebound from last week. Of course, we started the quarter quite slow. Now, if we look at what has happened 2023, now 2024, we can see that we are slowly but surely catching up to that 2023 pace. Of course, we still have a long way to go until the end of the year. So far, of course, the numbers overall worldwide for EVs, not just for Tesla, are not that reassuring. But besides that, we are still pretty close to that pace of 2023. Continue here in China, and this is a picture of the Shanghai megapack factory, the start of the, let's say, building process, or should I first say the groundbreaking process. It will be a $200 million factory. Q1 2025 will be the start of production, 35% quicker construction time than Tesla's Lathrop in California. Not surprising there. Initial capacity of 10,000 units per year, that's around 40 gigawatt hours. $10 to $15 billion of revenue per year from this one factory. The new factory covers an area of around 200,000 square meters and aims to export megapacks to overseas market, including the Asia Pacific region, to support the global green future. Of course, if you've been following the news this week, in that region, specifically China and Taiwan, things are heating up. Then, talking about my favorite part of the business, which does not get that much attention at all, is the Tesla semi-truck. So apparently this is a rendering of how it would look like once it's fully built out. Currently, there's still nothing there where the factory should be, but once fully ramped, it will produce 50,000 all-electric semi-trucks per year. Whenever that will be remains to be seen. On a positive note, we've got here some new trucks for PepsiCo. So they said in the next several months, 50 semi-trucks will operate out of its manufacturing and distribution facility in Fresno. Now you might say, oh, okay, but we know that they've been working with PepsiCo and some others as well. These might be old trucks. Well, if you zoom in a little bit, you can see that the VIN starts with 24 and not 22 like the previous ones. So this should be considered as new trucks, plus they have the Pepsi branding. Of course, we've heard some comments around the Tesla Semi during the last earnings call. I don't expect anything to materialize until the end of 2025. Now, moving towards some things from their report, the impact report, which basically covers everything that happened in 2023. Some positive numbers came out of that, some positive expectations as well. And one thing I want to start off here is the recruitment, the amount of people that apply for a job at Tesla. They received 5.9 million job applications in 2023. That's a 64% increase year over year. So clearly there are a lot of people that still do want to work at Tesla, despite all the so-called brand damage, despite all the media coverage or negative coverage of the company and of its CEO. Let me repeat it, 5.9 million job applications received in 2023, a 64% increase year over year. For the people that will now say, oh, but they laid off 10% of their workforce. They laid off 10% of the workforce in 2024, not 2023. And just because they laid off some of their employees, 10% in this case, does not mean that they do not hire in other positions or will not hire throughout the next coming months. Moving on to the energy side of the business. So renewables and energy storage are already cost competitive. And they say here that Tesla is working with its customers on projects upwards of 3,000 megawatt hours and expect total deployments in 2024 to grow by at least 75% compared to 2023. So I repeat myself again and again. Yes, it's true that right now Tesla, the majority of its revenue is coming from the automotive part of the business. But since that part of the business is basically slowing down right now, but the energy side of the business is continuing to grow at a faster pace, we could definitely see that mix of revenue and especially profits as well starting to shift and have a better balance. And that's before you account for the future revenues and profits that might or might not come in, depending on whether you believe it or not, from robotaxis, FSD licensing, and robots, Optimus, etc., etc. Talking about some revenues from different segments, here is some useful information with regards to Autobidder, their real-time trading platform for grid-scale battery storage that has generated more than $350 million in revenue for Tesla and its customers since launching back in 2017. Of course, they're talking about revenues, not profit, but I would expect that this is a very, very high margin business. Some might say, oh, since 2017, only $350 million. That's not much. Well, you start small and then you start to scale up and accelerate that. And still, the more and more people adopt this type of technologies, the bigger this segment of their business will grow. And I'm sure we're going to see this number, $350 million in a couple of years' time and say, whoa, that was quite low. Quickly switching to Hyundai here. So Hyundai is doubling down on EVs despite sales slowdown. I do want to give Hyundai and Kia a huge shout out because one, great cars, great products in my opinion, and unlike many others, they're not slowing down with their transition to EVs. They are making great cars, great products, good quality, great pricing, and innovating quite fast. Some people on X think that they will be one of the first one to license FSD from Tesla. I still believe it's either going to be a Chinese company or Ford. Then moving on to some positive comments from an unlikely corner, or maybe it's a likely corner because Tesla is a huge customer. So makes sense that they get some positive comments from their CEO, who's basically Jensen Huang, talking about Tesla with regards to autonomy.
Well, Tesla is far ahead in self-driving cars. But every single car someday will have to have autonomous capability. It's safer, it's more convenient, it's more fun to drive.
And it's true. In the future, if you're going to buy a car and it does not have autonomous capabilities, would you buy that car? In my opinion, probably not. Now, Tesla did release another safety report here with regards to the amount of accidents, the million miles driven before an accident occurs, the United States average, Tesla vehicles not using autopilot technology, and then Tesla vehicles using autopilot technology. It's pretty clear that one, Tesla drivers just drive better than the average, and two, Tesla vehicles using autopilot technology are much safer. Yes, Q3, Q4, winter months, bad weather, usually you get a bit more accidents there. Q1, Q2 are the better months, but look at that huge increase Q1 2024 compared to Q4, Q3, Q2 last year, and even Q1 of last year. The software just becomes better and better and better, and so less and less accidents occur. And so moving on to this tweet by Omar, Holmar's catalog on X, valuing Tesla based on expectations for the auto business is like valuing Nvidia based on expectations for the gaming GPU segment. To which Elon answered, yeah. He basically talks about Nvidia before the ChatGPT moment. Why is that? Well, if we go back to those quarters, you can see that the gaming segment for Nvidia was bigger than the data center one. But look at what happens afterwards. Of course, there was also some weakness in gaming, but afterwards, data center revenue started to grow and grow and grow. And basically, well, they never looked back. Right now, they're generating $22.56 billion just from the data center segment, and gaming is now at $2.64 billion. $2.64 billion, Q1 fiscal year 2025. Q2 fiscal year 2022, $3 billion. So generating less from the gaming segment today than they were back in fiscal year 2022. But they're generating 5 times more in data center revenue. Now, of course, I'll be the first one to say we don't know when that ChatGPT moment or when that FSD moment will happen for Tesla. But if you believe that it will happen, then yes, looking at Tesla right now purely based on the auto business just doesn't make any sense. Remains to be seen when that ChatGPT moment will actually happen for Tesla. And so if we look at the graph right now, this on the weekly, we did have a green week. We rebounded above the 20 and the 50-day moving average, closing the week just under $180. If you ask yourself what those two circles are, this is the shareholder meeting in June. This is the earnings report in July. And then I should have added another circle here for the August 8th event. But so far, we are still well below the 200-day moving average, although that is coming down each and every week, closer to the $200 mark. As we make our way through the year, we get closer and closer to that downtrend line, and of course, the higher lows that we've been making for quite a while. Remains to be seen. At one moment, we will have a quite violent move for Tesla stock, whether it's on the upside or downside. My bet is on the upside, but again, I don't have a crystal ball. So overall, that's about it for me in this video. If you enjoy this type of videos, do leave it a thumbs up, subscribe. If you have not, do share your thoughts down in the comment section below, and I'll see you all in the next one. Bye bye.